Okay, let's get started slowly. More people are joining, which is great. But just to let you know that we are recording this session, and we will be sharing it on Spark Innovation Hub. And first of all, thank you so much for joining the session. And as you know, Spark Innovation Hub is a community platform that is dedicated to um, increase the partnership and exchange of knowledge and promote best practices, and also share information among Spark's partner organizations, program participants, and we are here today to launch a series of webinars. And so we are starting with access to finance for technology ventures. And today we will explore different funding stages of technology ventures, expectations of investors, which is a very crucial topic, I believe, for support organizations as well as tech startups. And finally, we will dive into the example of Turkey as a startup ecosystem. And we have here today Okan Altaşlı with us, and he has an extensive experience in finance and banking industry, and specifically in private equity investments. He has more than 20 years experience in investment banking and development finance across Turkey and MENA region. So I will give the floor over to Okan. And then you can please feel free to raise your hand if you have any question. So yeah, over to you, Okan.
Okay, thank you. Thank you so much. Emre has made the introduction. I don't need to add much. Maybe what I can add is that while I'm working at Spark in the last almost 4 years now, we have been working with startup ecosystem players here in Turkey, especially, and working with technoparks. So this has given me a hands-on opportunity as a TA partner in the system. So I really appreciate and value this opportunity the Spark has provided to me. So let's like today's agenda, as discussed, we briefly talk about. I mean, since we have a diverse audience, we thought it would be good to talk about some basics first about the access to finance for technology ventures, and then talk about a bit of Turkish experience, how the Turkish ecosystem developed over the last 10 years, what are some of the trends, and this hopefully Turkey being one of the major economies, and I believe it's a success story in spite of all the ups and downs. So I believe, or hopefully, it can create some interest and discussion, and give maybe an example for our partners in different countries. So we will have a Q&A session like after each section. So like Emre will help me with managing that part. So let's briefly discuss about the entrepreneurial process. Of course, I mean, money funding is, especially in the last few decades, for value creation, what really matters is the team and technology, and funding is actually the easiest bit, especially in the ultra low interest rate environment that we have had over the last maybe 20-25 years. So like this funding has become, if you have a good team and good idea, funding has become less of an issue over the years, which is of course very encouraging. And but still it needs to be, it if you want to be a successful entrepreneur, you need to pay close attention to and be aware of the options and alternatives for you. So if we look at that, like, of course, friends and family and bootstrapping is when you start a venture, this is where you start. You put on your resources into the initiative. But then also, like grants and incentives are also in some markets, including the Turkish market, an important part of the equation, and you need to be aware of these opportunities. We have, of course, business angel organizations and institutional VC and capital markets as the traditional sources of financing. And we have crowdfunding. This is a new, a relatively new phenomenon but it is becoming an important tool for funding. And finally, bank loans. This is not really for technology ventures, but sometimes when you have a technology venture, you might have a side business such as an advisory business, which may be bankable, and you can depend on that business to fund your technology venture. So you also need to keep that in mind, because bank loans are the cheapest source of financing. So yeah, I mean, why? Just very briefly, the access to finance is not only for resource for growth, it's also important validation, a third-party validation of the concept and the technology and the team and the concept. And it's important for building market reputation and risk management. When you have a bank relations, you can use insurance, or when you want to import stuff and you want to enter new markets, you might use LCs, for example, for foreign trade. So for a technology venture, it's important to be financially literate and be aware of these tools and use these tools effectively. So this is true for regular businesses as well as the technology venture. So let's go very quickly to the funding stages of a tech venture. As most of you may know, from the concept stage to a strategic sale or an initial public offering to the exit stage, there are different stages, different needs as the business grows. The first stage is, of course, seed capital, which is the capital needed for product development, market analysis, building a management team, hiring a management team, etc. And after you have a viable product, then you are ready you're readying yourself for market entry, or you made some initial sales, you have some invoices. So then at this stage, you might start to knock on the doors of VCs, like institutional investors, venture capital funds. These rounds might be, you might stay in the stage for a couple of years and do multiple rounds of funding. And then after the business is viable and you have created a credible business, you have built a track record, then you might go to cheaper sources of financing, such as bank loans and supplier finance. And at this stage, private equity also, like I'm talking about maybe 5, 6, 10 years down the line, private equity for growth capital might also be an option for you. And finally, after the business reaches maturity, you might exit through a strategic sale, selling to a bigger player in your sector, or a foreign investor, multinational, or do an initial public offering if your sell your shares in the stock exchange, in the capital markets, and provide liquidity first for your investors, and which have invested with you in the VC stage or as private equity investors, and then to yourself. So this is in a nutshell where the tech venture funding journey is. So let's talk about a bit more in detail what are the options, different options for during these development stages and different funding options. So typically during the concept and feasibility stage, you have founders, friends, family, and you have people who basically believe in and trust in you. And you can, during this stage, many tech ventures also might have a consultancy business or other business to support the tech venture. So this is an important source of funding to keep in mind. And there are also grants by the governments, like the local government, or it could be multilateral financial institutions or development banks like EBRD or the EU. So these grants are also important cheap source of financing, and for an important source of financing that should be kept in mind. And during the feasibility stage, you can also tap into angel investor networks, which are typically individuals with some experience in entrepreneurial process and would be supportive as well as providing funding. So crowdfunding platforms is becoming an interesting source of funding. Here, basically individuals who are interested in technology or trying to catch new trends are using these platforms. We will mention the Turkish example in the second stage, and this is definitely something you should look into, because this could be an important source of finance for you. So, and as the venture progresses and matures, you have the venture capital and strategic partnerships and bank loans come into the picture. But these are more like, let's say, institutional investors typically are more disciplined investors, and they look at certain criteria and in their due diligence process. So before you come to that stage, venture capital funding stage, you really need to use the other sources of funding that I just described to mature your idea and venture. So just a bit of, like, very quickly, what are the pros and cons of venture capital funding? This is obviously resources for your company to grow, and a good venture capital fund has some expertise or can access experts and give you access to new markets and technological know-how, and they know how to grow a business, technology venture, and they can discipline you to implement the business plan, etc. And they can bring in other financial resources. But on the other hand, obviously you're not alone. You should fully formalize your business, no unregistered sales, etc. And you have to have you might have to give veto rights on significant business decisions, and of course regular financial reporting. And there's this question of exit that is in the minds of these venture capital investors from day one, because their funds have a finite life and they need exits So all these cons, all these requirements should be kept in mind. So very quickly, the VC decision-making process starts with investment analysis. So I'm going into this because when you start talking to a venture capital fund manager, you have to make your preparations accordingly. So obviously, market analysis, team quality, competitive advantages, what's the investment amount? Before you start talking to a VC, you should have very solid answers to these questions, which will come. And of course, a business plan giving projections, income statement and balance sheet projections, giving expected sales and profitability, and a risk and mitigant analysis. It's not when you're selling your idea, you are of course very enthusiastic and look at the bright side, but you also need to able to give good answers to potential risks that you will face along the way. And after you have you agree on the valuation, etc., investment structuring is important. What will be the investor's exit and the rights you give, like tag along right, drag along right, etc., to the investor, so that the exit is achieved. And the partnership conditions we just discussed, like briefly touched actually, the basically veto rights on important decisions. So you should you should have thought about these points before you start talking. So what are the VC investor expectations? These are very high level, of course, but typically a very high return for very high risk, typically more than 50% in dollar terms per annum for their investment, and a clear exit plan, and a clear understanding of business plan targets and risks and mitigants, and the team's ability to execute it alone, confidence in the team. So like you should not be giving the impression that you will be relying on the VC investor to reach those targets. They want minimum interference. They want to believe in the team and your abilities to deliver, and with minimal support maybe on as a consultant. And of course, and finally, the confidence in the founder's ability to manage risks. If there's a loss of a key team member, for example, or if there's a loss of a key client, will the founder be able to come up with a alternative to that, for example? This is what I mean. So secondly, the clarity on investment amount, use of funds. That is what will you use the money for exactly. This needs to be clear on the business plan. Comfort that the founders have enough funds coming from VC or other resources collectively to execute the business plan, and regular monitoring. It could be operational and financial as well, and there is a mechanism to intervene if there are significant performance problems. For example, ability to appoint a CFO or change a key team member if things go wrong. This is not their of course they want to rely on the team to execute the business plan, but like in a disaster scenario, they should be able to intervene to save their investments in the minimum. So this is, as you might know, most of you know, this is a very high risk business, and there are a few stars. A majority of the investments will be lost. Some will break even. So this is the portfolio that a VC investor will typically look at. So they will really focus on the stars to create their returns, generate their returns um, after their investment. So, couple of words on the mindset of entrepreneurs and VC investors, and these are potential sources of friction. Entrepreneurs are generally inspired by technology and rather than customers and solution. And whereas VCs are interested in returns and returns within the lifetime of their limited life funds. They don't want to wait for and they don't take especially satisfaction from like solving a problem. So this is not what they care about. So yeah, entrepreneurs want to retain maximum ownership, and investors, VC investors might be willing to dilute it and to see the business grow. So entrepreneurs might want to stick and to their investment baby to the business, and they might not have a view for exit. But VCs definitely, the exit is the returns and exits are the two top things in their minds. So entrepreneurs may not see the project as time critical. Yeah, but then this is not the case. Time is very important for the VC fund. Entrepreneurs are focused on one company at a time, but VCs have a portfolio of investments, and their attention is divided. And entrepreneurs may find transition from startup mode to corporate status unworkable. Like early during the entrepreneurial process, different technology entrepreneurial skills are needed, but as the company grows, more like corporate growth skills are needed. So as the entrepreneur, as the business grows, the entrepreneur may not be ready to have the culture change in the organization. So that can create a lot of friction with the VCs. So may relapse to lifestyle. That means entrepreneurs might just not, after some success, they might be happy with some modest returns and relaxed lifestyle for their ventures. But VCs, they want to create very high returns and more than 50% dollar per annum. So they might have a very different view for the growth of the business. And yeah, and entrepreneurs might need a few like small sums, a couple of $100,000 maybe at the beginning. But VCs have a sweet spot, a ticket size. They find small sums uneconomic. For them, a bigger ticket, bigger investment is more interesting actually. So yeah, I mean, these are some of the potential areas of friction between entrepreneurs and VC investors. So you should be aware of these potential conflicts, and when you start talking to a VC fund. So very quickly, let's keep in mind they are intermediaries. The money they are managing, VC fund managing, is not their money. They have investors' money, and these investors are not one-time investors. They're managing funds over the years, and they want to keep those investors happy and satisfied. So it's not a one-time relationship. It's a very painstaking process to raise funds and maintain those relationships. And entrepreneurs have, and this is very important for the VC business model. So who are the typical investors? like public sector, especially in emerging markets like Turkey and MENA, other countries, multilateral development banks are generally supportive, as their mandate is to support development of their member countries. And in more developed markets, like pension funds and private individuals are also typical fund investors. And so fund manager raises this fund, manages it, and through exits distributes the fund to the investors, getting its performance fee and management fee, of course. And so the return is usually through the funds are returned either as cash as you make a sale, or if you list the company, you can also, the portfolio company, you can also distribute shares in a listed company. Can you hear me? It says your internet connection is unstable.
Yeah, we do.
I think
We do
it's
hear
fine.
you. The video was
Great.
freezing a little bit, but now it's fine. Yeah.
All right. So this is in a nutshell the first part of my presentation. If we can have like a 5-minute Q&A session, we can do it now, or I can continue with the second part.
Yeah, thank you, Okan. Does anybody have any questions until now?
Hello.
Hi,
Hello,
please
Ali.
introduce yourself first, and then let's have your question.
My name is Ali Zainuddin. I'm a Lebanese engineer. I have a master's in artificial intelligence and financial technology. I'm also a chartered financial analyst. First of all, thank you very much, Mr. Spark and Mr. Okan. Please, sir, could you elaborate more about this slide, especially that it goes into, I believe this is where the whole story goes for the angel investors and governmental bodies interested in investing. So they create a sort of a hedge fund to manage their financial issues. So we always, when we try to pitch to VCs, as if they are, quote unquote, as if they are afraid of having a certain appetite of risk because they have to report back to their initial investors. So can you feedback us, give us their sort of recommendation? Actually, I'm pitching within the next week. So
Oh,
is there
excellent.
any is there any sort of a recommendation or advice in order to make the VCs feels more relaxed, if I were to say, while having a very experience, more than 20 years of experience of technical people, in addition to a robust business model with 7 financial revenue streams. So we're so much, and we feel safe about our business approach. However, we had a sort of feeling that the VCs are afraid, or there's no risk appetite at the moment. Sorry, it was a long question, but it has.
Sure. Yeah, important, good question. Thank you. So, I mean, first of all, I mean, the last 2 years has been a very tough time, like globally for tech investing. And as we have seen, funding volumes drop by 50%, even in developed markets like UK and US. So these are really not good times for fundraising. So, but then the tech cycle will, of course, pick up. So, but one thing that I can tell, like at times like this, the jurisdiction can sometimes be a turn off. Like this is even true for slightly more developed markets like Turkey. And as we will see in the second section, like a lot of Turkish tech entrepreneurs, even though they have their operations here in Turkey, they choose to incorporate their companies in like UK, in Germany or US, for example, and this is and basically like knock doors as a international UK based venture. So this is a way to like alleviate this problem. And then of course it also has it's not only for optics, it's also great for accessing those markets as well. So but then you can have your base, most of your operations in your home country, because people and you have a much lower cost base, and operate as an international tech venture. So, and in your case, I think I understand your software. You have this software venture. It could be feasible and make it more attractive to the investors. Just a suggestion.
Well noted. Thank you very much.
Welcome. Welcome.
Thank you, Ali. Does anybody have any other question? Okay, I think we can continue with the second part. Or yeah.
Let's continue, and we will have another Q&A at the end anyways. So let's after this general quick introduction, let's talk about the Turkish startup ecosystem. Turkey is one of the major economies in MENA, and we have a growing technology venture scene, especially in the last 20 years, but things have picked up quite nicely in the last 10 years, and we have seen some multi-billion-dollar tech valuations and exits, like in the year 2020 to 21, etc. So even lately in 2023, we have seen $500 million investments in tech companies. So here's a short presentation of growth. You see the total funding in top. Like last year, it was around $913 million. But look, like in 2021 and 22, it was almost double that. But if you compare to 10 years ago, it's still, even today, it's a very depressed market, as I said, globally. But we have still a big jump. The trend is very strong. And instead of the tech funding crunch recently, Turkey ranks number 9 in Europe in terms of deal size. And in MENA, it's number 3 after KSA and UAE. And the number of deals is, you see, typically about 350 in the last 3 years. And we have seen some star technology venture exits in gaming sector, in online food delivery. Some of the Turkish technology companies have become actually international brands, like Getir, for example. You might see them in Europe, in different countries. And in healthcare sector, in different sectors, we have seen these star exits, which is really intrigued investor interest in Turkish companies. So what are the sources of financing? So we have, if you look at the sources of financing, it's pretty generally diverse, but the Turkish venture capital funds we see that have been the largest source of investment. And the individual investments are pretty moderate, like around $10-15 million, whereas the institutional funding is really, really massive. And this is also because of maybe this credit goes to the capital markets of Turkey for that, definitely, because we have the venture capital investment fund regulation, which is very, there are certain taxes, exemptions and benefits, and also the public the public sector is providing significant resources to these VC funds. So, but this is like, and it's also you should keep in mind that Turkey has not, in the last few years, there has been a lot of turbulence in the economy, and this is really, I think, if Turkey were to become more open to more on the radar of international investors, hopefully in the coming years, this picture might change, and we might see a lot more international investors coming in. But like the moral of the story is that the local capital market boards have a good role, had a good significant role in the growth of the Turkish market. So as I mentioned, and when I'm answering the question, so what when we look at the companies that have received funding in 2023, we see that a lot of them are, although their operations in Turkey, they have headquarters in the developed markets like US, UK, and some like tax advantages, some jurisdictions with tax advantage like Estonia, and this is like most of them, and most of them still are based in Turkey, but foreign-based startups are getting, I think, better deal when it comes to raising funding. It's easier. Recording in progress. Okay, I'm continuing now.
Yeah, sorry, just a
Is
little
everything all
issue
right?
with the internet. Yeah.
All right.
Yes, please proceed.
So,
Thank you.
yeah, the second, on the funding side, I think a second important trend that I want to highlight in Turkey is the growing importance of crowdfunding platforms. Crowdfunding, as you know, is a recent phenomenon. Maybe in the last 10 years, it's appeared in the tech scene. And the crowdfunding platforms have become regulated entities in Turkey. They're regulated by a capital markets board. And as of now, there are 7 active crowdfunding platforms in Turkey. And they have become quite important, actually, in the last 3 years. And they are able to, they're a good channel to channel for individual small individual investors funding to different tech ventures. And if you look at the 2023 figures, 57 companies have received crowdfunding, and then they were operating in sectors like consumer products and services and sustainability and environment, etc. So there's this fear of missing out for investors with small funds who are interested in technology, or who are interested in who has appetite for risk. So these crowdfunding platforms are a good vehicle to channel those small investors into technology ventures, and it should not be. They should definitely be kept in mind, and this could be I think, good example for maybe the policymakers in other countries. To use them as a channel for tech financing. So another point that I want to make, the next point I want to make, is the Turkish government's strong support for development of technology ventures. I think the technoparks, which have started operating in Turkey like almost 20 years ago, more than 20 years ago now, have become an important hub for especially software industry. Currently there are more than 80 technoparks established in the country. And these technoparks are receiving tax exemptions on payroll taxes, corporate taxes, etc. And they provide a good ecosystem support for the investee companies, for the companies operating there. So that's definitely a success story. And secondly, I want to mention the accelerator and grant programs run by the Scientific and Technological Research Council of Turkey, which is called TÜBİTAK in Turkish acronym. So every year, TÜBİTAK announces these accelerator program and funds not large amounts of money, but maybe with $5 to $10 million, provide grants to the really successful applicants, like applying from all over Turkey. And also SME Development Agency of Turkey is a source of support, but most of the support, the public support, grants come from, 95% comes from TÜBİTAK, the Scientific and Technological Research Council supports. So how does the accelerator, TÜBİTAK accelerator works? It starts with an accelerator training, and which includes mentoring, basic entrepreneurship training, but also technological and commercial concept validation. And then companies who are getting the startups who are selected get around $30,000–40,000 of support. It could be a grant, and lately I think they are asking for 3% of shares. So it's really there's some equity dilution, but it's really minimal. So the idea is not to idea is really to support rather than making a commercial investment. So the companies that get this support are eligible for the programs of TÜBİTAK with like international organizations like EBRD, Royal Academy of Engineering, etc., for commercialization and international expansion programs and other tech supports, and Turkish VC investment program. So it's an important seal of approval that is respected by the Turkish VC community as well. So, some facts about key results of the accelerator program of TÜBİTAK. So more than 40,000 applications received, and 2,293 technology ventures established as a result of this over more or less 10 years. And survival rate of 6-year-old firms are above 70%. And like female entrepreneurship is increasing through these supports. And these are better quality companies. Like most successful entrepreneurs are PhDs, and age group is like slightly more mature professionals, young professionals with some experience already establishing the most successful ones. So yeah, these are the some figures and facts about the TÜBİTAK program. Finally, I also want to share the VC survey results of a research firm in Turkey about the this survey is done with interviews with venture capital funds operating in Turkey, about 35 of them, and this is how they see the current status of the VC market, technology entrepreneurship, technology businesses in Turkey, and what's the trend. So overall, the quality of the startups, the VC firms are generally happy about the quality of the startups, and they rate it as good, 49%, and they see that compared to last year, there's an improvement or about the same. So the trend is definitely positive there. So this is maybe showing the success of the accelerator programs or these supports. So current competition on deals in Turkey, this is still limited, as we saw, like maybe 80% of the funding VC funding came from local VC funds. And this is also true given the current tech funding crunch globally. And therefore, there is limited appetite from investors outside of Turkey. So this is actually a good time to be a VC investor in Turkey. So fundraising conditions in parallel with the world, of course, are not as good, but still like 26% is rating it as good, and 37% says it's average, but it's generally worse compared to the last years, because we are really in the as I said, global liquidity conditions are not good for tech investments. And the exits, finally, the exits are like one of the most difficult issues in Turkey, be it for private equity fund management or venture capitals. We have an active capital market in Turkey, but this is not, of course, a huge, this is not a viable exit for many VC companies, like technology ventures. So therefore, for successful exits, you really need to structure it when you're investing. You really need to have a view to sell your business to an international player, or you really need to think about it at the outset and not leave it as an afterthought after when the exit time comes. So this is the critical point in Turkey, even in Turkey, which has a relatively liquid market. So this is all I have to say about Turkish market as well. I hope it's been useful and gave you some ideas. We can have a Q&A.
Yeah, thank you. Thank you so much, Okan. I personally found it very insightful. We have still some time in case you have some questions for Okan. No questions.
Hello. Yes, I do, but I don't like to
Please.
bother with the second question. If I may, Ali.
Please, Ali.
Regarding the exit strategy, how can someone, realistically speaking, build an exit strategy with being realistically on a certain level of estimation when it comes to the numbers, while there's no scale up, no high tractions, very high opportunities for new markets, several vertical segments that can align in a certain project. So if the project is facing high potentials, however, it's diverse when it comes to its business to government, business to business, or business even to customers, and on another dimension, it can serve several vertical segments from energy to other segments. So taking into consideration such a project, how realistically to develop a vision when it comes to the exit, or is it just a one slide to say that, hey, I'm a unicorn, I'm gonna be listed as an IPO, this is what I dream. So So we internally have a certain level of fear not to be taken seriously, especially that in our projects, it's a multi-sector, multi-dimension, and several vertical segments to serve with very high potentials for scalability. However, when it comes to the exit, it has been a great debate in our team. But truly, actually, yeah, I do the CEO title of this company, so all my team are going through heavily debates and arguments regarding the exit. I don't have a clear ground to why to build the exit apart from having the VC or the angel investors' interest. I don't see why do we have to build an exit, and if we were to do it, so how to be realistic.
Yeah, yeah, welcome. So I mean, for I think when you're in tech sector, I don't know about your ventures nature that well, but like if you're in a fast developing technology, fast evolving technology industry, I mean, there has to be, you have to keep in mind that you're, yeah, I mean, you might be, you might have a million competitors very soon, like in the next 5 to 10 years, let's say, and the value you might have to share the pie very quickly, and your profit share might your profitability may erode very quickly. So therefore, like from this life cycle, technology life cycle point of view, I think you should have you should think of exit from that sense. So it might be good to be a part of a large, bigger strategic investor when your sector reaches maturity. It might be better for you for competition purposes, because you will lose your first mover advantage in the mature sector. So that's number one. Secondly, what kind of exit? How can I mean, if you're not focused on a specific vertical, you should be prepared to. I mean, you should be prepared to carve out part of your business who might have a buyer. I don't know, maybe for B2B solutions, if you're both serving B2B and B2C. So, and if you have an interest in the part of the business which has a B2B portfolio, then that part of the portfolio might be split into another company, and this could be a partial exit for you. This could be a nice exit opportunity for you. So you also have these alternatives if you have a diverse business. So these are some thoughts, that I can reply to your question. I don't know if it makes sense.
More than thankful. Thank you very much.
Welcome.
Okay. Do we have any other questions?
Or comments? Not only questions, but comments. If you agree, disagree, if you might see this is not applicable to your market, please then also let's have a debate. Also, that's also possible.
Yeah, maybe this is a question to colleagues or partner organizations from the region, since we discussed this is the first edition of a series of webinar. do you find such content useful, or like do you find the experience from different countries also useful? Maybe this is a question to Maysam or Abdulaziz. Would be happy to hear from you also.
Hi, Emre, and thanks, Mr. Okan, for the nice presentation. I can't say that I understood everything because we don't deal with that big of enterprises all the time, to be honest, because we are still within like both incubation to accelerations, sometimes scale up activities, but we're not dealing with a lot of VCs. We work with VCs. We sometimes on establishing frameworks, ESG models, but not really deep investment stuff. So I think this is really interesting and very useful for us. And I think maybe not to comment on the session itself, but probably more on the content. There's a lot of information gap pre-Series A, let's say, or those type of big, in our scale, big investments that, bridging investments or something like that. Of course, there are several instruments and products out there, convertible loans and mezzanine funding and stuff like that, which I cannot claim that I understand all the science of it. But I think this is one step to understand so that we reach the higher level investment. I would like to hear maybe your comment on that. But generally speaking, thanks a lot for your presentation and the Spark team for organizing these things. It was a short notice, but glad that we managed to join and listen. Thanks a lot.
It's great to hear that you enjoyed it. I mean, this is like we wanted to cover the whole story in 1 hour, so I rushed it a bit. But like for the pre-stage 1, there are of course different instruments like mezzanine financing or preferred equity. Between equity and debt, there are hybrid securities in finance, which one can use to mitigate risks, and these are widely used in the developed countries, but like in some of the developing countries, there is no like a culture, or there is no even like proper commercial code to implement some of those. So if I understand it correctly, these like instruments preferred equity, etc., you probably will have to establish your company at a developed market to be able to have a solid legal framework to implement such arrangements. So yeah, I mean, we can if there are, my suggestion is, if there are like these kind of specific topics that is particular interest to you, maybe there could be, I suggest we could have a call after this call, and then have the next webinar could be about the specific needs of our partners and friends in this sector.
Appreciate that, and thanks a lot. And yeah, I would also opt for that and vote for maybe a next session that would cover a bit more details and how to bridge, because when we speak to our entrepreneurs, it's hard to shift their mindset to think of the exit or the series A, B, and C. It doesn't apply in our case, unfortunately. I mean, in the tech sector, especially in Jordan, I'm calling in from Amman, Jordan. So we see that sometimes, but Does that apply to all other sectors? Unfortunately, very, very limited and rarely to see that happening. But thanks a lot for that. And yeah, happy to listen more to other more specific and detailed topics. Thanks.
Yes, yes. So yeah, I mean I think the first thing is, yeah, I mean this lifestyle, like lapsing to lifestyle, that was one of my points. Like when you start a business, you will reach a certain level of comfort, and then you will not take risks after that. This is something that the VC investors don't like. They want you to be greedy and ready for an exit, to make it big and like invest in the next idea. So this mindset difference is this mindset isn't like, it's a cultural thing. I'm not saying it's a bad thing. It could also be a good thing depending on how we look at life. But this is not the capitalist worldview.
Yeah. Okay.
Yes, I
Abdulaziz,
just
you
wanted
want to say
to
something?
yes,
Please.
to thank you for the presentation. It was very interesting, and I'm very interested to see a deep dive into also the Turkish ecosystem. And thanks to Spark's team to organize this webinar. And what I understood is it's going to be like a series of webinars. So I think it's great. I just wanted to bounce back on the fact that yes, venture capital and fundraising is also a main point here in Tunisia. And maybe it's also at the same time the main point, at the same time the main pain point, actually. So for different reasons, I guess. I think it's like multi-sectoral challenges, and it's great to have your point of view also on this topic. If maybe I could comment on the webinar service, it's great, and I think I'm gonna jump back also on Maysam when he said that the scale may be different from what you have presented to us and what is here in Tunisia, actually, and as Maysam said in Jordan. So it can be great also to deep dive into more specific topics, so we can have more time to focus on some very specifics. So thank you very much.
Yeah. I mean, we have experts in our network. I mean, I can help with some more specific stuff, but not me only. Like we have experts in our network, which we can tap into, and yeah, I mean, I think this is the start. That's a good idea. I mean, we should have. We can do that. Like next ones might be more focused. Definitely.
Great. Thank
All
you
right.
very much.
Thank you, everyone. And your feedback is very well noted. And we will let you know about the upcoming webinars. And Okan will share his slides on the platform's event page. And feel free to comment or share your feedback for the future sessions. And thank you all for joining today. And yeah, have a nice day.
Thank you.
Bye.
Thank you.
Thank you. Bye-bye.
Bye-bye.